Hi there, my name is John Stevenson, the Guaranteed Retirement Guy. Today we're going to be talking about the best indexed annuities out there right now. Okay, so if you're looking for an indexed annuity for high growth, and of course the market protection that they provide, then listen closely because I'm going to show you all of the top companies and rates. Okay, so if you're looking for high participation rates, high cap rates, okay, if you're looking for companies that have high renewal rates of those rates, because you might be shown something by an advisor that looks pretty good with a decent, an index maybe you've never heard of, it looks fancy, it's got high participation rates, and he's showing these just elaborate proposals that look awesome, but they'll never materialize, okay? So learn from someone like me who has been doing it for a long time and who knows which companies are actually going to produce the returns you're looking for, okay? So I'm gonna share my screen. I'm gonna show you everything that's available. So you'll notice here when I am scrolling down, this is everything, okay? There are hundreds of these, okay? Hundreds and hundreds and hundreds, okay? I mean, look at this. It's like 3,000, okay? There's so many indexes and companies to choose from. And you're probably like, what do I do? Which company do I pick? Okay. Well, I would just recommend working with an advisor that focuses solely on these because there are advisors out there that manage money and sell annuities, and they usually don't know a thing about annuities, or if they do, they know very little, or they work with like one or two companies. Okay, work with someone who breathes this day in, day out, who dreams about it at night. You can book a call with me. There is a link below this video, or go to my website, johnstevenson.com, and you'll see a link to book a call there as well. Okay. So, and again, there's a lot you can do with indexed annuities. You can attach income riders and have guaranteed income for life, and it's very, very high. It's awesome. But if you're just looking for the best indexed annuity and you want growth in market protection, this is what I'm going to focus on for this particular video. Okay. All right. So if we look at here, I just threw in someone from Florida. Okay, 62 years old and with $500,000. You might have 100 grand, you might have $1 million. Okay, so it just depends on what you're looking for. So here's what you need to look for when you're looking at indexed annuities. Ratings are important. Okay, A+, yeah, it's nice. Atlantic Coast, B++, they're still a decent company. You just got to know who you're working with. Okay, and you should be working with an advisor who knows these companies very, very well. Okay, Allianz, A+, they're the largest in the world. They have decent growth. I've watched them for years and they have really good growth, and they give you the index lock. We'll talk about that, okay? Probably don't know about index locks or rate locks, okay? There's things that you need to remember. You got GBU Life. You got Athene. Athene's good. They're really good. Americo. And a lot of these are a lot of the same companies that will come up, but I can go through many of these. I mean, there's Security Benefit, Aspida, Pruco is Prudential, and so on. All right, so a lot of different ones. So let's kind of dive in. You can see the 10-year, 15, and 20. Okay, so 10 years, even though it says 10, 15 years, does not mean that particular index has actually been around that long. Okay, so you have to remember that with some of these, they are back-tested returns, which means they're not real. With back-tested returns, yeah, it might materialize, but a lot of these back-testing that people and professionals put into place, they don't account for slippage. It's impossible, okay? I've done the same thing, okay? I've done my own back-testing, and real-world market conditions, they do not match, okay? You might look at a algorithm or a plan that is going to work great, but when you plug it in for real, and when the market's moving fast, you can't get in or out, and your limit orders are not hit, or your stop loss orders are not hit, and it completely changes the whole thing. Okay, so just keep that in mind. And a lot of people don't think about this when they're looking at indexes. They're like, oh, it looks like a great index. I think I'll buy it. Okay, well, if you're looking at indexes, look at well-known ones. Okay, NASDAQ, that's a well-known one. Okay, let's see, 3-year diversified macro, not so much. Morgan Stanley, yeah, they're well-known. Barclays, yeah. Let's see, NASDAQ, UBS, they're decent. I've seen them make some money. Let's see here. UBS, NASDAQ. There's some S&P 500s in here too. Lots of S&P 500s. This is just showing the top ones. So this is filtering up to the top ones. You'll see some S&P 500 here. So a lot of different ones to look at. And you can see the rates are pretty decent. It's showing 14, 16, 16.41. I can go in here and say, well, I want to look at an index. Let's see, I could choose the index that I'm looking at. I could choose the averaging type. So a lot of these are showing, a 1 year. I like the 1 year because I like to earn interest every year. I don't want to wait 2 or 5 years, which some of these will make you wait to actually get interest credit to your account. So like the 2 year. I mean, I don't mind putting some money into the 2 year, but maybe not all of it. Okay. Look at the 5 year. That's not bad, but you got to wait 5 years to get that interest credited. The nice thing about Allianz is they allow you to have the index lock with this particular one. So not with all of their indexes, but with this one, they do. An index lock is basically this. You get in right here. You know, at the end of 5 years, it's going to measure, hopefully, an upward, momentum and credit you all that interest. With an index lock, it might go up really, really hard in the first year or two. And you're like, I want to lock that in. What if it goes down and erases all my earnings and I get nothing at the end of the 5 years? The nice thing with an index lock is they will let you lock in that growth. So if it goes up to 16 or 20% ahead and you're like, I'm getting out, you can totally do that. It works very similar. You got limit orders, you've got stop loss. Like you can literally put 2 of those orders in and you say, all right, well, I want to lock this much in up here. If it gets down here, at least I'll get 10%. But if it gets up here, I want to be able to grab 20% if it hits up here without me knowing. That's kind of nice. Allianz is one of the only carriers that will allow you to do that. Okay. So one thing just real quick, as far as talking about indexes, you might be wondering, how do I earn in the index without having market risk? How is that possible? Well, it's simply a call option. So these insurance companies will spend billions of dollars every year for call options associated with these indexes, okay? So it's the NASDAQ or S&P or whatever, they're buying call options. And you'll notice with some of these indexes that are not well known, they'll give you 250% participation rate. That's because the options are super, super low because there's not very much volatility in that new index, which means you probably won't earn that. Okay. So they'll give you these huge participation rates and they'll say, oh yeah, it's going to do great. It's going to do great. Except it doesn't have a lot of trading activity. I mean, there's not a lot of trading activity. The options are super cheap. And so just things to remember. I mean, people don't think about this. They just think, oh, I'll buy an annuity that gives me market protection and gives me growth in the index. Great. Well, it's nice to know how it works. Okay. This is why I tell people, if you're going to buy an annuity, any type of annuity, work with someone who does it full time. Because your financial advisor who manages your money, they don't do that full time. It's hard to spend your day knowing everything. Okay. It's better to know and to be good at a few things than to spread yourself out and be terrible at all of them. Okay. So work with a professional, work with an expert who specializes in these. Okay. So, and I'll show you when you book a call with me, I will show you the best ones. I'll show you which ones I recommend, which ones have high renewal rates, and then which ones have the caps. So let's take a look at the caps. I'll go down here and I'll say a rate guarantee. I want the highest cap, which I can get higher caps. If I don't click this rate lock in, I'll get higher caps. I mean, you can see them right now. Look at the participation rates, 550%. That's ridiculous. Okay. That means if it earns 10, you're going to get 55%. Okay. That's crazy. But if I'm going to do something like that, I probably do NASDAQ. Okay. A participation rate, 240%. They're charging me a 1.25 fee for it. But if NASDAQ does 10%, I'm going to get a lot. Okay. So that's pretty good. That is something I can get behind and I don't mind paying the fee if the market's going well. If the market's not going well, I'll just do their non-fee index. Okay. You don't have to pay a fee. All right. So rate lock-in. A rate lock-in is basically a rate or a cap. So they're basically promising we will not change this rate, whether it be a participation rate or a cap rate during a certain amount of years. That's what it is. So, which is good to remember because these rates and caps change every anniversary. So if it's a 1 year point to point, they're measuring that index during that time, then they are going to change the rate depending on the call options, depending on what they cost after the anniversary. So remember that. Okay. So if we're looking at rate lock-ins, then here's the top ones. GBU Life, 2 year, 170% participation rate. That's with the Barclays though. So you got to look up that index and say, how long has that index been around? Maybe that's decent, maybe not. Okay. Account fee, though, is 3%. Sheesh. That's expensive. All right. So let me go here and I'll just say no fees. Let's see. All right. Good. Got that out. Okay. So Atlantic Coast, macro. So here's another fancy index I know nothing about. 10 years locked in, though, participation rate of 320. So if it earns a ton of money, you're going to make a ton. The problem is it hasn't been around very long. Okay. All right. Let's see. B of A, Global Mega. Oh, let's see here. Franklin. You see, there's a lot of ones out here. But what I usually do is I'll tell people to do something that is known. Like, look at that, 1-year S&P 500 dynamic intraday. All right, we know the S&P 500, don't we? So this will lock it in for 5 years. And the surrender charge period is for 5 years, okay? That's pretty good. So they'll give you 65% of whatever it earns. That's really good. Okay, that is something that you know that's never going to change. And at the end of 5 years, you can reevaluate and decide if you want to keep your money there or put it somewhere else. Now, if I want to go down here and I'll just further filter it out by the index, I'll just say S&P 500 only. Okay, what is the highest for that? Well, Global Atlantic. They'll give me a cap of 8.25 for 7 years locked in, which means they will never lower that cap during the 7 years. So if the market does 9%, I'm going to get 8.25% every single time. Okay, I'm never going to have that lowered, but it's never going to go up either. Okay, so if you want a higher cap, National Life Group. National Life Group, they'll give you like 11 and a 14% cap, okay? And they're known for keeping their renewal rates high. They don't give you any rate lock-in, but they are known for keeping the rates high. And so you got to work with advisors who know the ins and out of these companies, who can tell you, well, here's where you need to put your money, or you need to do this company or this company, and here's why. Okay. And if the advisor you're working with has not been working with these and they don't know their renewal rate history, they haven't watched them for years like I have, then they're not going to know. Okay. So they're going to give you their best advice, which is not going to be very good because it's not going to be founded on a lot of data or just a lot of experience. So anyways, all right, that's it for indexed annuities. If you want to book a call, there's a link below this video. There's a link on my website, johnstevenson.com. And you notice on my website, there are calculators for annuities. These are for income annuities, okay? The highest income possible is from an income rider, I would say 99% of the time, okay? You got SPIA, DIA, and QLAC contracts as well if you're looking for those. I sell everything, okay? And I work with all the companies. So I show you everything that is available. And you notice that when you go to my calculators, you'll be able to see a lot of companies, okay? So it does not show you fixed index annuities because these rates, these cap par rates change all the time. So I can't possibly, and there's so much to digest there. It's better to book a call to talk specifically about growth strategies, not income, but growth strategies. If you want income, you can do that. You can attach income riders to these and you can have lots of income from it. Your account balance will run out at some point, depending on what the market growth is. But that's okay because you might be trading 300 grand in for $1 million pension. Okay. That's what you got to think of when you're looking at these income products. So when you're looking for index annuities, pure index annuities, use them for growth. If you want income, you can still get an index annuity with an income rider and get solid income or a SPIA, DIA, or QLAC contract. Okay. All right. So that's it for the video. I appreciate you watching. I hope this has answered your questions. If you want to book a call, you know where to go. And if you like the video, make sure you click the like, share button, and make sure that you comment below. I'd be happy to answer your questions. So again, thanks for watching, and we'll see you next time.